Okay, ladies and gentlemen, well, welcome to the ScaleUp Institute and British Business Bank finance session for scale-ups in the Southwest. I'm Stuart Rock from the ScaleUp Institute. I'm going to be your compere for today's event. This is a bring a cafetiere party, so I hope you have your coffee with you. Over the past 6, probably 7 years, it's been an exciting privilege for me to work with Irene Graham and her team at the ScaleUp Institute as they've made it a real voice of influence up and down the country, helping to make the UK the best place in the world to grow a business. Today's event focuses on scale-up growth capital, the trends, where to find and how to find the appropriate capital for your company's growth, and to get a better understanding of the wider ecosystem that you can tap into for support. So we've got a terrific lineup of speakers and a wealth of knowledge for you today. If you have any questions, put them in the chat. First, you're going to hear from Irene Graham, CEO of the ScaleUp Institute. After Irene, we'll hear presentations from Lloyd Breener and Paul Jones from British Business Bank and David Golding from Innovate UK. And we'll then have a panel session in which we'll bring together the co-founder of an innovative, fast-growing business in Cornwall, Sam Boex of Flexi Hex, and Lauren Crawley-Moore from the London Stock Exchange, Ned Dorbin from BGF, and Ben Tickler from Silicon Valley Bank. The whole session is going to finish at 11:30. You'll have the slides available to you afterwards, so don't worry about taking screenshots and scribbling furiously. Let the coffee percolate and let your questions come forward. And so without further ado, my great pleasure is to hand you over to Irene Graham, CEO of the ScaleUp Institute. Irene.
Thanks very much, Stuart, and good morning, everyone. It's just great to be here with the scale-up community in the Southwest and with our partners, British Business Bank, as well. It's really important that we're with you today, those of you scaling in the Southwest, because you really are our innovators, our productive businesses, our international businesses, and the ones that are growing in your region, who are also the employers of the region. Scale-ups in the UK, we have overall nationally 33,445 scale-ups, and they generate 50% of the small and medium enterprise economic contribution to the UK. So scale-ups are 50% of our SME economy. You are generating collectively 1.1 trillion to the UK economy. And there in the Southwest, we've got around 4,000 of you, 2,600 scaling up at 20% or more, and 1,400 at that 15% mark, coming up to that scale-up agenda, and you are generating 45 billion in the Southwest alone. So that's absolutely incredible contribution. You're employing over 355,000 people. So it's so important that we get right for you what your needs are and deal with your challenges. And in the Southwest, you're very clear about what those challenges are. You've been very clear to us in 2021, November, what your thoughts are heading into 2022, and very clear on some of the big issues that still remain for your growth, whether that be getting the right access to markets, internationally, domestically, collaboration with corporates and government, whether it be getting the right access to talent, or importantly, what we're focusing on today, getting the right access to growth capital, the capital you need to further embed your growth globally that you're seeking to do. And you're also very focused on how you get access to that research and development and innovating funding, which is why it's so good that we've got the British Business Bank, Innovate UK, and the finance experts with us today to talk about raising capital in 2022 and what's available for that. 7 in 10 of you are planning to probably raise capital this year. 5 in 10 of you think that actually that money is sitting in the Southeast. So how do you get it connected into the Southwest and get connected to the funders in the Southwest? And 3 in 10 of you are feeling that you don't have enough capital at the minute for your growth plans. That's why we're so focused as a scale-up entity on making sure that we actually connect the capital in at all the right levels of the overall journey and escalator of finance. The escalator of finance, how we connect you from the very early risk capital, where we have angels, grants from Innovate UK, loans from Innovate UK coming in really importantly to support your growth opportunities, right through to then the VC, the follow-on funding, the patient capital that comes with players like the Business Growth Fund, so the crossover funds, and then IPO. And you're going to hear from Lauren today around what's happening in the IPO market. It's been pretty exciting in 2021 and what the opportunities are in 2022. Our role is to make sure that we help you navigate some of the landscape, whether it be for finance, whether it be for the talent needs you have, or the leadership development that you want to achieve. So we're always looking at what's available in the marketplace and what's working for you, giving you insights in terms of growth capital or what's happening locally in Cornwall to west of England to our friends in the heart of the southwest, and also trying to make sure there's a better building of the capacity in the investment arena. And we work a lot with players like Bryony locally there and players in the Engine Shed and Set Squared. So that's what we're here for you, to help you and to help you navigate. And today's about that, as I say, that scale up growth capital and what's available. We're championing you across the public and private sector to make sure you get what you need as scaling businesses across the country. So without further ado, I'm now going to move into the next series of presentations and discussions. Just a big message from us: just keep energizing, keep scaling, and keep doing what you're doing in the Southwest, because you're really making a difference there, and we want to make sure you get connected to the right capital. So welcome to today's session, and I hope you find it very useful. Get your questions ready. Thank you.
And thank you, Irene. Thank you. That's great. Yeah. As she says, get your questions in, and it's fantastic to see a great array of really fabulous, interesting and exciting scaling up businesses who are here joining us today. Now, may I introduce to you Lloyd Breener and Paul Jones from the British Business Bank. Paul's had 30 years in banking and finance. Lloyd, he's worked with over 1,000 scaling business, innovative businesses. Lloyd and Breener, the floor is yours.
Thank you. I'll kick off and thanks for the introduction, and always really great to be here and sort of listen to what is really becoming a really high growth, high energy Southwest for scale ups. British Business Bank, for those that don't know, we're 100% owned by government but managed independently. We're not a bank in a general sense, but we what we do is actually lend wholesale into the funding markets. And then my role and Lloyd's role is to ensure that we understand exactly what's happening on the floor in the Southwest, and we make sure that funds are coming across. And if they're not, we report that back and see what we can do to change things. If you click on for me, thank you. Our mission recently changed: drive sustainable growth and prosperity across the whole UK, so the levelling up piece, and enable transition to net zero. That's been added in the last year, and something we're really keen to work alongside everybody. And the last part there, improving access to finance markets. The work we've done over the last few years, bringing over £8 billion of funding to the marketplace, is testament to that. So our main KPIs or main drivers: to increase the supply of finance, to make the market more diverse. At the time of 2010, we were mainly bank-led. Now we've got a real good array of alternative finance, and our equity markets are working better. They can always improve further, and that's what we continue to strive to do. To call out those regional imbalances and to make some differences. Be a centre of expertise, so it's the number of reports that there are on our website, which will really help sort of show where the financial markets are, and our new KPI there on the right hand side, our transition to net zero. If you could click on for me. As I said, we don't do this alone. We actually push our money into the financial markets, which has a bigger reach, and that's just some of our delivery partners. So there's 180 different finance companies that we work with across the UK, and we're adding more every day, or it appears to be the case. And what you'll see from that is that every type is there. So we have the big four banks. We have a number of funding cycles, from equity, angel groups, into asset finance, and that. So there is we are completely agnostic and help in every way we can to get cash across the country. Click on for me. Talking to ScaleUp particularly, of the 8 to 9 billion that we've invested so far, 3 billion of it has been invested into ScaleUp, helping over 1,200 businesses, an area which we're looking to grow with a couple of our programs actually starting to expand. Our enterprise capital funds is a fund where we support smaller fund managers. By doing that, we help with leveling up. We get the funds into more regional and more sector specific areas, and there's just some of the examples there. Over 1.6 billion has been invested into this area, helping 600 companies. And I've called out Ada Ventures there at the bottom, which was one of our most recent investments, and they work really well across the Southwest. And Brian, I know is on the call, is one of the scouts for this region. And then our regional angel program, recognizing 2 or 3 years ago that the angel programs or angel groups were tended to be more in London and they could do bigger investments, we set up £100 million to invest across the UK. There's over 13 angel groups that we've invested in, all outside of London. And I've only called these two out because they invest strongly in the Southwest. Newable Ventures, along with Bristol Private Equity Club, secured 10 million and done over 6 million of lending across the Southwest, and look to do more. The funds have helped them to do more follow-on and step into that scale-up space. And also Startup Funding Club, or SFC Ventures as it now is, really great start for them. And they set up a £40 million fund a year or two ago, and have done over 2.5 million in the Southwest. So we're starting to see some really good growth from the angels, and also just a little bit later stage in helping that first step of scale up. All of these are available on our website, and happy to for you to have those links at the end of the presentation. If you click on for me. So the amount of money we've invested ourselves into the Southwest, £379 million across almost 6,000 SMEs. Slightly lower than the number of SMEs we have, and in there we really need to get more cash into the Southwest. And I think the presentation earlier showed that entrepreneurs tend to go towards the Southeast for funding. So we're really keen that we get more and more supply into the Southwest. Our startup loans, which maybe isn't for this audience, but 21 million, helping almost 3,000 new businesses start. A lot of those will come to scale, and it'd be remiss not to mention that the COVID loans of the last 2 years. 133,000 loans put out, £5.8 billion of lending has gone into our SME community, and the Future Fund, which saw around about 3% of the cash coming here to the Southwest to help some of our scaling businesses to continue through that time. If you click on for me. Couple of things just to really call out within our reports. We do our annual trackers of financial markets, which are really good for seeing trends and where they're going. And there's one due out in March, the Small Business Finance Monitor. But we also do a number of ones around diversity. So Alone Together and female founders in the last 2 years has really helped to start driving a more equitable and balanced market, an area that we're really looking to continue to drive and support. Another slide, please. And then where can you find access to our programs and maybe our delivery partners, and really a welcome sense of agnostic advice. So everything is on there that you could dream of, from case studies, how to raise equity. So that the website's saying you'll get these slides after, but the Finance Hub continues to build, continues to grow, and is really your access to the British Business Bank and what we offer for you. And I'll hand over to you, Lloyd.
Thank you, Paul. Good morning, everybody. So these are our existing regional funds, which are obviously highly relevant to talk about for the ambitious scaling businesses in the Southwest. But you might be saying, well, it's just Cornwall, so why is that relevant? Well, I'll come on to that later, because there was, as most of you probably know, there was a significant announcement in the spending review back in the autumn around a greater rollout of the bank's regional funds. But these are the existing ones, and I'm just going to spend a little bit of time talking about how the Cornwall and Isles Scilly Investment Fund is getting on. You can see it's oh, sorry, if we can just go back, you can see it's, sorry about that, you can see it's slightly smaller than some of the other funds, but this is a very significant amount of money in Cornwall, where historically the levels of equity investment have been very low. And thank you, I'm ready for the next slide now. So this is some of the recent stats up until November last year. And one of the things I really want to highlight here is that equity investment has remained very strong, despite what's been going on in the wider world over the last 2 years. So, you know, in the face of the pandemic, the fund has nevertheless managed to reach a total of £10 million invested in total. That's across debt and equity, but you can see that the equity side of things is making up about £7 million of that. If you look at the box on the bottom right there, you can see that that's had a really strong effect on attracting other money into the deals that the fund has worked on. So it's certainly the case that the bank's fund manager, the FSC group, scrutinizing investments, undertaking due diligence, offering the opportunity to other investors has really brought some really intense and active activity into the equity sector in Cornwall, which was a very, very much needed thing. So it's great to see the fund performing so well in that respect. And I think it's a very good sign for what may come in the future. So equally though, the fund also has debt options as well. And I think we've got a couple of representatives from the fund on the call today, Ralph and Tim. They may be individuals that you wish to speak to, even if you're not currently based in Cornwall. We do have examples of businesses that are perhaps not headquartered in Cornwall, but wanted to set up a facility in Cornwall that have been able to access the fund. So that's why I was particularly keen to highlight that. And next slide, please. One other thing just to mention as well, the equity investment's been very active. The fund does look to make appropriate follow-on funding as well. So it's not a sort of a one-off thing if that isn't right for your high growth journey. So here's just a quick example. I know we're going to hear from Sam Boex at Flexi Hex later within the panel, but here's another recent investment that the fund has made. So Arc Marine, who were established for a little while now, but have been developing some really neat technological solutions. Eco-engineering, I think, is the term that's used, and they're basically using recycled materials to get to a carbon neutral, plastic-free, world-beating product, it seems, called the Reef Cube, and you can see them on that photo there. And these are used for marine habitat restoration projects, and this has got really great growth potential to grow and be used globally. Very much a purpose-driven business. Carbon footprints could be reduced by as much as 90% from some of these projects. The total deal size was in excess of £2 million. COISIF came in with £1 million into this deal. So you can see that having a fund around is really significant and helpful, and indeed, in many cases, can attract other investors in, or give them that sort of sense of security, and sometimes be led by the fund manager as well in terms of the deal arrangements. In Arc's case, whilst doing their research, they came across some potential angel investors with very relevant expertise. So this is something the bank is now consulting on, with primarily through the LEPs currently. So if you've got representations or thoughts to make about the forthcoming fund, then speak to your local LEP. They are in the process of gathering evidence. So equally, if you've got examples of businesses having struggled, or you can see the need for the fund, now is the time to provide your evidence, because that will help structure the design and deployment of the fund. Something that our regional funding team has been doing for quite some time is ensuring good geographical coverage. So we can you can rest assured that that will be built into the design of the fund, and deployment could come as soon as next year. So it's really quite exciting and quite promising for the Southwest that we could see similar levels of support for debt and equity investment across the Southwest through this new forthcoming regional fund. So I think that takes us to the end, and thank you very much for your time.
Thank you, Lloyd, and thank you, Paul. And it is a very exciting prospect of a new 200 million fund for the Southwest being deployed by 2023. So yeah, it's very exciting news. I'm now going to hand you over to David Golding from Innovate UK. Great pleasure to introduce him. You're lucky today. Few people know more about how innovative scaling businesses can be supported than David. David, over to you.
Thanks very much, Stuart, and good to see everyone today. And many thanks for the ScaleUp Institute for the invitation to be here. I'll just share some slides. I'll just get those going. Great. So I'll tell you a little bit about what Innovate UK does and how we support businesses to grow and scale. Within Innovate UK, I look after all of our global innovation partnerships and helping businesses scale both in the UK and globally. And for Innovate UK, so we're the UK's National Innovation Agency. And so we're there really to support businesses to grow and scale, and to do that through investing in R&D and innovation. And I'll talk about some of the ways that we support businesses, both in terms of the finance that we provide and also some of the non-financial ways that we help businesses. So we're probably best known for providing grants for businesses. So these are generally R&D grants, either to a signal business or for businesses to collaborate and collaborate between businesses or between businesses and research organizations. And that can be universities, can be research and technology organizations, catapult centers. So there's a range of ways you can do that. We've also got procurement contracts, innovation loans, and investor partnerships. And I'll touch briefly on all of those. The right way. So one of the ways we support companies is, particularly individual companies, is through smart grants. So these are generally grants aimed at SMEs and total project cost of in the region of 100,000 to 500,000 for projects up to about 18 months in duration to single organizations. And then if you want to collaborate and longer term projects up to 3 years, those can have total project costs up to about £2 million. So everything's run on a competitive basis within Innovate UK. So as it says on the slide, it is highly competitive. So I think we're only funding around 10% of the applications we get at the moment. So we get lots of really good applications which we can't fund. But we're putting around £100 million a year into smart grants through 4 competitions a year, so run on a quarterly basis. And say, gives you the opportunity to really look at the R&D innovation you want to do as a way of fueling the growth in the business and enabling you to grow and scale. So say very competitive, but a good way of getting finance into the business, which obviously is non-dilutive through grants. And for a medium-sized business, you probably having to look at providing 40% of the funding, and for a small company, 30% of the funding. So we're matching the contributions from businesses. SPRI is a really interesting program. So this is really where we join up with the private sector, and this is about pre-commercial procurement. So it's enabling small companies to come up with solutions that often the public sector needs. It's 100% funded, which obviously is very attractive because it's a procurement contract. And generally runs in 2 phases. So you can do a feasibility study where we're providing usually between £60,000 and £100,000. And if you're then successful getting through to the new stage, the second stage after that, you can get up to sort of £2.5 million for some of the competitions. So a really good way of not only getting some money at 100% funding, but also linking with a public or a private sector customer or challenge owner, who will obviously help you develop the product and provide input as to what their needs are. So a really interesting program that's certainly worth looking at. One of the more recent things we've been doing is innovation loans, so providing funding for later stage R&D, where companies have got a clear route to commercial success. So this is for SME applicants, and we're providing loans below market rate, and with sort of a flexible and patient terms, so up to 7 years, and up to 100% of the eligible costs. We're again operating on a competitive basis, so we're not supporting all of the applications we get, but we're keen to support companies who really understand where they're going and what the growth and scaling potential is of the business. So loan size is between 250,000 and up to 1.6 million pounds. And I think over the last 4 years, we've issued somewhere in the region of 80 million pounds worth of loans to businesses. Investor partnerships is a program where we're providing grant funding to businesses, but also linking them with private investment. So bringing in VCs and angels to provide the equity investment alongside our grant funding. So if you're successful through one of these programs and get the grant, you've then got the option of also working with the investors and bringing in the investment to match fund Innovate UK's contribution. And again, over £60 million has been made available in grants over recent years, leveraging somewhere in the region of £70 billion in aligned investment from and 175 million in follow-on investment from the private sector. Innovate UK Edge is really where we're then working with companies on a non-financial basis. So we have 270 innovation and growth specialists and 22 scale-up directors across the UK, working with businesses on a one-to-one basis. So this is very much support tailored to the needs of individual companies. So if you're in receipt of Innovate UK funding, or actually you're keen to look at how you grow the business, then Innovate UK Edge is there for you and to support you. So if you want to get in contact with one of the innovation and growth specialists, there's a contact email at the bottom of the screen there. One of the things we deliver through Innovate UK Edge is the ScaleUp Program. So we've had, I think, around 120 companies going through that. Pleased to see Janice from Taste Tech on the call today. I was very privileged to visit Taste Tech a couple of years ago and see what they're doing, but they're one of the companies on the program. And this is really a program geared to companies who are really looking at high levels of growth. So we provide very intensive one-to-one support from a scale-up director. And we have a scale-up board of 22 scale-up directors bringing their combined wisdom and expertise together to support businesses to grow and scale. So again, if you want to know more about that program, please contact Innovate UK Edge, which is delivered through Business West in the Southwest. One of our other networks is the Innovate UK Knowledge Transfer Network, and this is a network connecting people with opportunities. So if you're a business looking at academia and wanting to understand who are the right academics to work with, or wanting to understand who the right organisations to talk to, or other businesses that you can collaborate with, then the KTN can help you do that. So very good at making the connections and joining up people in different thematic and sector areas. And then we have the Catapult Network. So this is a world-leading capability, bringing together specialist facilities and expertise for companies to access. So we have 9 centres now, in different areas. We have the National Composite Centre in Bristol, which is the main centre in the UK working on composite materials, and obviously very key for the aerospace and marine sectors. But we have other ones around medicines discovery, satellite applications, energy systems, and digital. They're there really to help and support you look at how you grow and scale the business, but by using their expertise and facilities to do that. And then we have global programs. So not only do we help you domestically, we also help you grow and scale internationally. So we help you find international partners and collaborators. We fund R&D and innovation projects. We help you explore new markets and understand what the opportunities and challenges of those markets might be, and understanding the culture, laws and legislation, so you can really access those markets more easily. So we have a range of programs enabling you to do that, which also includes visits to various markets, such as North America and Asia in particular, where we tend to focus. And finally, just to touch on our diversity and inclusion programs. So we have programs working with women innovators and young innovators. And we're also just starting to look at working with disabled innovators. So very much a key part of what Innovate UK does, making sure we get and make sure we encourage and get diversity across business innovation. So yeah, a key part of what we do. So that's very much a quick whistle-stop tour across all of the support that Innovate UK provides, and obviously very happy to answer any questions, or if people want to send me emails, happy to respond to those. So many thanks.
Oh, thank you, David. It's a really comprehensive array of programs you got there. Just a couple of questions about taking up the point about the ScaleUp program, the Innovate UK Edge ScaleUp program. Have you got any plans for scaling it up?
Well, we certainly have, Stuart. So I mean, we're keen to ensure that more companies get the support of the ScaleUp directors and ScaleUp board. So we're very keen to expand that and to enable more companies to take part. We're also working very closely with the ScaleUp Institute on peer-to-peer networks. And so we're rolling those out across the UK. We've got them already operating in all of the regions of the UK. And again, we're keen to ensure that that continues going forwards, because we see real value not only in us sort of funding companies and supporting them directly, but actually getting companies to talk to each other and really learn from each other. And that's a key part, again, of the ScaleUp program going forward. So, yeah, very much. We see a huge amount of value in the ScaleUp program, and we will be scaling it further.
Great. And a couple of other other questions that came to me. I've been scribbling down here while you were going through things. The innovation loans, which obviously are very that's a big area. And just a bit of insight. What's the sort of time for turning around? If somebody applies for an innovation loan, what kind of time scale should they be thinking about in terms of getting it accepted or not?
Yeah, we really try and with Innovate to reduce the timescales as much as possible, because we recognise that the more time we're looking at things, the less time people are actually getting on and working. So we're trying to reduce those as much as possible. For innovation loans, we're working around 3 to 4 months at the moment. Sometimes it's a bit quicker than that, sometimes a bit slower. But generally, if you apply, then you can certainly expect a response within that period of time. Yeah.
And the other one was on the investor partnerships, which clearly is very effective in terms of leveraging in external other investors. Again, have you got plans for increasing the scale and reach of those investor partnerships?
Yeah, we see a huge amount of value in bringing what we're doing together with the private sector. So often the grants we're giving to companies are helping to de-risk some of the technology and R&D that they're doing. And so we're really keen that we bring alongside private investment, obviously where companies are looking for private investment, to link into the grants and obviously help the companies grow and scale much faster than perhaps they could do otherwise. So again, we're looking at how we work with the private investment sector much more, not only through the investor partnerships, but other programs we have around investment readiness, and looking at how we link into some of our challenge programs as well. So there's a lot going on, both in terms of the investor partnerships, but the wider programs we run, particularly in different sectors.
Yeah, great. Okay, well, that's a fantastic overview, David, as I knew it would be. So and thanks so much for your contribution. And but I'm now going to invite our panelists to make themselves known. And again, if you've got any questions in the, do put them in the chat. Kamal, I can answer yours. Yes, you will get you can get the recording for the Zoom. So thank you for taking the screenshots and sweating away. But I hope you're enjoying the coffee and you can concentrate on the content of the day. Now we've got our panel appearing. So we got Sam Boex, who's co-founder of Flexi Hex, Lauren Crawley-Moore from the London Stock Exchange. We've got Ben Tickler from Silicon Valley Bank, and Ned is going to reveal. There he is, revealed Ned Dorbin from BGF. What we'll do is we'll have a chat with Sam first, and then the rest of our panel will join in. But Ben, Sam, in the first instance, sorry, a quick summary. Tell me about what the business does, when it started, and what's the big market opportunity that you saw?
Okay, perfect. So Flexi Hex, we started the business in 2018. Just to give a bit of context, we've been run a design business for around 15 years, and in product and interior design agency. And had a background in surfing, and the reason for this will become clear is that in sort of kind of 2017 received I bought a surfboard online, and it came in reams and reams of bubble wrap, basically. So we developed a product which is effectively this paper honeycomb packaging solution, which goes around surfboards to give it protection, and it's, they say, paper-based versus the plastic versions on the market.
Right, and that was. And tell us about how the business has grown from that initial good idea to actually selling and designing and selling a few of these products and getting it off the ground. Tell us a bit about how the business has grown.
Yeah, I mean, we launched January 2018 with this product, which you can see behind me, which is this paper honeycomb product, and we realized it had potential, but we weren't sure which direction it was going to go in. But we started growing very quickly, selling initially into the board sports markets, but then we developed products for the drinks market, and that now is probably our kind of biggest area of growth at the moment. We're selling throughout the UK in the drinks market, but also starting to sell globally as well. So to give an idea maybe of scale, kind of year sort of FY19, we turned over around 80k. Then we turned over around 190 in FY20. Last year we turned over 700k, and we're on track this year to turn over around 1.2 mil. So we're scaling relatively quickly. Last year, say, sort of 260% growth, and we're starting to move into multiple different markets. We see huge applications for the sleeve product. It's a very simple product, but it is amazingly versatile. So yeah, we're starting to move into cosmetics and say drinks, homeware, things like lighting. Cosmetics, I think, is a very exciting area for us as well. We've developed a lighter weight sleeve, primarily for, as you say, these fragile, smaller items. It's made from tissue paper. The paper itself is I say 85% recycled content. So it's a kind of it's a very sustainable product.
Wow, and it's patented in any way? Have you got any protections over this?
Yeah, very good point. So very early on, when we initially put the first product around the circle, we thought, right, this has definitely got applications in multiple markets. So we started the patent process, and that is expensive, and it has taken it's still ongoing. But don't underestimate, as a startup, don't underestimate how long the patent process takes. I'd also say, just as from the experience, also don't stall your business and the idea because you haven't got a patent. We ran the growth of our business in parallel to the process of getting a patent. So we now have the patent in the UK. We also have patents throughout Europe. We're patent pending in the US and Australia, and we also have a patent in China as well. So, but that's taken 3.5 years to get to that point. So, and probably upwards of around 60K in fees. So yeah, it's not to be taken lightly.
So tell us about the financing path, because I'm in 2019 you got funding from Innovate UK and from a fund called Sky Ocean Ventures. What was that for? Talk to that stage of the funding of the business.
Yeah, let me go back a little bit further as well. I think just to give some sort of some context to it. I think again just to relate us to sort of startup businesses. We're from a design background. We ran a product and interior design for 15 years, and when we started Flexi Hex, we effectively put a loan from our other business into Flexi Hex around 30K and thought, right, let's put 30K into this and see what happens to it. Firstly, it's amazing how quickly initial rounds of kind of funding and investment go into the development of product. And our initial thoughts are, oh, put 30K in and then suddenly it will become a global business. It's so not like that. We then, October 2018, we had an angel investor come on board, and he invested a percentage, invested in the business at a value of around 700K as a business value. And he's from a business background and has been a brilliant mentor. So that was a huge kind of like, although it's actually it was very difficult decision for us initially. He was 100% the right investor, and we were able to lean on him for his experience from the businesses he runs. We then from that July 2019 had additional support from Sky Ocean Ventures, as you say, Stuart, and they were great in being able to springboard us into kind of new markets and help us to develop products as well, to enable us to scale. We then and then in 2020 we were still growing quickly and starting to develop in more focused in these particular markets, and also wanting to scale globally. We went through a crowdfunding campaign, which was again really good to have. We had around 600, I think, individual investors within the business, and raised around 750K from that round. Just again to come back, I think, just as from our sort of experience of this investment, looking back now, I realize the importance of starting small and taking small steps and smaller chunks of just start very small, get to kind of like know your investors, and don't give away big percentages of your business at those embryo stages, because you realize how important those kind of like that those smaller percentages become as you grow as a business as well. And then so we had the crowdfunding raise, which was an experience, hugely exhausting, hugely it sort of like catapults you into the limelight in regards to kind of like into a forum where a lot of obviously investors and on a global stage can see the business, and you realize there's a huge amount of work in preparing kind of obviously your pitch deck and the video which goes alongside that, and the due diligence to sort of get over the hurdles, but that again it shone the spotlight on the business. So it was a very good investment, and we have now a solid sort of a crowd of people behind us.
Which platform did you use for the crowdfunding?
Crowdcube.
Really?
Crowdcube, and they were really good.
And then you've got more recently got this from the Cornwall and Isles Scilly Investment Fund as well.
Yeah, exactly. So recently, this just last year, September last year, we had super exciting investment with the Cornwall and Isles Scilly Investment Fund, and also of around 500k, but also match funded with some debt finance as well, which is able us to grow. We also had additional investment from some private investors, so making the total of around 1.2 mil.
So additional angels came in as well.
Yes, exactly, yeah.
Right. So
sorry.
No, I was going to say, you must have. I mean, this is a lot of conversations you're having with. Was it easy to connect with all of these investors, or did you do a lot of frog kissing?
Yeah. So I mean, when we went on this journey of getting investment, I would say from a personal point of view, of backgrounds like parents who are self-employed, they've grown businesses without any investment. It was a huge step for us, but I've got nothing to say but good things about going down that road of investment and be able to scale. But it is like dating. You have to choose your investor really well. You have to make sure you've got a very good relationship and you're very clear on kind of what you're going to be giving them, and also what you want from them as well. And you just have to ultimately it's down to people, and you have to get on with people. We struck up a good relationship with Ralph at the Cornwall Scilly Investment Fund, and just felt that was a really good, I suppose, next and mature step from a business point of view to get that kind of investment, and a super exciting opportunity, obviously, to get investment from a fund down here as well.
And the advice about that you received, is there anything you wish you'd been told earlier in terms of before, as you raise this money?
I think don't be afraid. Don't be. I mean, the whole as many people on this call will experience, like growing a business is extremely daunting, and investment is one of those. There's a lot of kind of like positive aspects to it, but there's also you hear sort of the rumors of investments which have gone wrong, and so it's a big decision in the business. I think I would say don't be afraid to get people to invest in the business if you think they're the right people, because it does enable you to scale. So I think what my experience is, I think exactly that. Basically, that getting the right investor on board can actually be hugely beneficial to the business.
I've got there are a couple of questions coming in on the chat here. Someone said, Sam, who was your first customer? And actually, it probably begs as well, apart from telling us who your first customer was, I mean, how have you been able to attract and access the wider, this broader customer base if you're covering everything from water sports to drinks to cosmetics?
It's a really good question, actually. I mean, I don't think there are many businesses which operate in the board sports market and the drinks market, but we've actually been really focused. But the sleeve where we have the patent is our core area of the business. So we launched into the board sports market, and our first initial customers were sort of local board manufacturers. But we have the area where we've seen the most amount of growth is in the drink sector. And again, we've seen, I suppose equate it to almost like stepping stones. We started probably our first customer where we developed the product was with a local company called Tincture. They make gin in Cornwall, and they were one of the first kind of companies to come on board, and we developed a product specifically for their drinks that attracted kind of the bigger distilleries, which we were able to get to them. And slowly but surely, we've been moving up to the bigger brands. I mean, we're now working with about 5 or 6 brands of Diageo brands. Obviously on a global scale, Bombay Sapphire, and so we have But it was very much a process of learning, adapting, and sort of like moving with the market.
Yeah, and I'm mindful that we've got our other panelists to join in now. But a couple of sort of final questions for you. One is, what are you doing with the money that you've raised? How's it being spent? And when are you next going to need to raise the next round of capital? When do you see that happening?
Yeah, so the investment is part of the debt financing is enabling us to kind of like provide buy stock, and then the finance a large percentage of it, well, a percentage of it is to grow staff. We've gone from 7 staff last year to now 13, so that's being able to sort of like scale up the amount of salespeople, and we've just taken on 2 logistics people as well to manage our logistics globally.
So and the big challenge for outside of raising money, is there any one thing is proving a particular issue that you're having to deal with at the moment, whether it's finding the right people or getting into the right market?
I think the one thing that any business operating on a global scale is finding at the moment is shipping. So I'm sure everyone's heard of it in the headlines, but a shipping container was around $1,500 to $2,000 12 months ago is now $16,000. So yeah, we are feeling that a little bit, but are able to work with it just because our product is so compact. But it's certainly a challenge, and also the shipping. Yeah, just the time it's spent on sea, from 8 weeks now to upwards of 6 months. So yeah, some big challenges from the shipping point of view.
Well, I hope that some of those kind of ease themselves in 2022. Sam, look, it's been fantastic. Really, and very best of luck with the next phase of growth. I'm looking forward to receiving. I'm obviously going to have to order some gin so I can have it shipped to me so I can study the packaging in more detail. But it's now really, I want to bring in our panel who've been being there very patiently. Maybe Lauren, could I come to you first, the stock exchange? I know that 2021 was a bumper year for IPOs on AIM and the main market. Can you tell us something about the big trends that you've been seeing nationally, and what the current market dynamics are, and bring in any Southwest stories that are relevant to that, to highlight that?
Yeah, of course. Thanks so much for inviting me today. It's fantastic to listen to stories like that, Sam, and it just gets me so excited about all of the businesses across the region. I just recently joined the team at LSE and had the good fortune of covering the Southwest region. So hearing these stories firsthand is part of the great pleasure of my job. we've had a very, very busy year, 2021, for IPOs on the stock exchange, 126 companies, and without bombarding you with loads of statistics, raised around 16.9 billion, which is the most amount of capital raising since 2007. So a really exceptional year. One of the things that's most interesting actually about those companies is that just over half of them were on AIM. So lots of people, when they think about London Stock Exchange, they think about the FTSE 100 and the main market. But AIM is our company for growth businesses. And what that really demonstrates is that sort of among that deep pool of capital in London, there's a real interest and drive there for growth businesses with really good stories. And we've had sort of 4 companies come across from the Southwest during that year. We've got about 63 businesses from the region across the markets in general. I had the good fortune of welcoming ProCook on their first day of trading. It's a family-run business, brought their kids in for the market open. 25-year-old business came to market, really successful and done really, really well. The sort of sectoral trends that we're seeing, and we've seen, a really broad range of sectors, as you might expect, with so many IPOs, and perhaps predictably things like tech, obviously very high on the agenda, and with, the fantastic tech hub in Bristol in the Southwest, we're excited to see what continues to come out of that region this year. Other main areas were healthcare and perhaps, again, predictably green and sustainable businesses. We started issuing something called a green economy mark to businesses on the exchange a couple of years ago. We've now got around 120 businesses that have been issued with that mark. The mark dictates that the business has sort of just over 50% of revenues dedicated to green or sustainable incomes. And just as a sector, if you built those green economy mark businesses on their own, are the 4th largest in capital raising on LSE last year, which goes to demonstrate that there's a real drive there for businesses in the green and sustainable space, and that there's a lot of money available for investing in those sort of ESG based businesses. So that's another kind of key theme that we're seeing. And with COP in the UK last year, perhaps predictably that continues to rise up the agenda, both from an investment perspective, but also, if you're a company and you're thinking about your growth trajectory and how you're kind of putting your business together, that ESG piece is becoming more and more important.
And do you see that, there are obviously, you mentioned there about people think about the FTSE 100 and actually the focus is really on AIM. What are the sort of myths and misperceptions currently that you see regularly held by scale-up businesses surrounding the idea of an IPO on AIM even?
Yeah, I think, for us and as I and the rest of the team go around and speak to businesses, we always say it's never too early. It's never too early to have that conversation with us. That's what we're here for. You might be thinking about, as Ben suggested, this kind of small stages of funding as you go on, but to think, ahead of that. And it's always good to have all of the information. And for some people, they sort of maybe think about IPO latterly or perhaps don't perceive it as something that's an option for them. But, we have a lot of smaller businesses and even in some cases pre-revenue businesses on AIM. And so, don't rule it out as an option if you think, I'm too small or I'm not the right sort of business. Just come and have a conversation with us. And, we speak to businesses every day. And sometimes, the answer will be, not yet, or, maybe that isn't for you. And we're just as happy to have that conversation as we are to have a conversation with someone and say, yes, you're in the right place here. And IPO looks like a really good option for you for fundraising. I think the other thing that comes up quite a lot is that there's a concern sometimes when you list your company or you go public or you admit to AIM that you sort of lose control of the business. And something like a quarter of the businesses that came to market this year were founder-led, stood in the exchange with quite a few founders and families with their businesses. And one of the nice things about the investment community, and I'm sure BGF will be able to speak to this as well, is that it's just a really, knowledgeable growth company investors who understand businesses like this. And when they choose to invest with a business, they're not just investing in a business idea, they're investing in the team that are running that business idea. And they will, and they expect you to deliver on that. But there's a biannual reporting cycle. Quite often, some of these investments are, mid to long term passive. And the other great thing about coming to market is it's not just about your initial fundraising or IPO. You can come back to the market for further fundraising as you grow. So it has a really kind of long-term commitment to the growth of your business.
Great, thanks, Lauren. I see there's a question come up here. Could you advise the best route to investigate options to list on AIM? So I think I'm going to leave that
talk to me. That's the best route.
See, there's the answer. Now,
we please do. Please, that's exactly what I'm here for. I am based in Kent. I'm in the London office, and I will be out and about across the region throughout the year. But do reach out, and always very happy to have a conversation, whatever stage you think you might be at. Always open to doing that.
Right. They are Adrian, asker of the question. Now, let's move over to Ned. Ned, tell us about the BGF and investment activity in the Southwest, who you've been investing in and why, and also it'd be helpful to know how those recent investments come to you.
Yeah, okay, a few questions in there, so prompt me as I forget them, Stuart. But in terms of a bit about BGF first, so we are probably a slightly later stage investor in that we straddled the funding options that extend from sort of friends and family and early VC up to sort of private equity style investments. So we invest typically between £1 and £15 million, and we follow our capital over repeated rounds. But we work with a huge variety of different businesses. So sometimes it's much larger, more established, profitable, mature businesses. But then at the other end of the spectrum, we work with some very early stage technology, life sciences businesses as well. So it's a real mix, is the first thing to say. And then the shout out there to everyone is, if you're not sure, just drop us a line and ask. We'll give you a quick view. That's always really easy to do. So that's sort of where we sit in terms of some of the things we've been doing over the last year. Like a lot of people at the moment, it seems it's been a record year for us. We invested £600 million last calendar year, financial year for us, across a whole variety of different things. In the Southwest, it's about £115 million, which is massive in terms of what we normally do and are part of the market. So it covers a wide spectrum of different things. To pick out a couple of examples, we invested in a very early business called Forefront, which pretty much was a startup business with a handful or so of employees, got some specialist technology there around radio frequency applications for mobile phones. But then later stage investments, we put a lot of money into a large house builder that works across the Southwest. So you can see there, hopefully, in terms of those two examples, a real mix of size of business, but also risk profiles of equity investing that we do. I think the last part of your question, Stuart, was about sort of how businesses come to us, and that's a real mix as well. We do a lot of outbound work contacting businesses that we think look interesting, that are on a growth profile, and we might be able to help accelerate their growth through our funding and our board expertise. That's a big part of it. But also slowly we are building a household name for ourselves, he says, somewhat hopefully, in that we get a lot of inbound to us as well. We're not quite as well known as the stock exchange or indeed 3i, who were the household name, the go-to name in our part of the market in decades gone by. But we're getting there. Our business is about 10 years old now. I think we are relatively well known, but we've also got a big network. So we work with thousands of non-execs, co-invest with other funders, and work with lawyers, bankers, accountants, and all of those. That extended network contributes to introductions to interesting businesses for us as well.
Right. Maybe I could, Ben, I could come to you in the same kind of set of questions, really. I mean, I'm not sure how many people will know about Silicon Valley Bank. Are there particular sectors to which you're lending? Tell us a bit about what SVB is doing, and in the context of what you're doing in the Southwest.
Yeah, sure. Thanks, Stuart. And yeah, just reiterate, Sam, that was a brilliant presentation. Congrats on the sort of mission, and also your growth is unbelievable. So yeah, very well done. So yeah, I work for Silicon Valley Bank. Naturally, we originated from the US 40 years ago because of the name, but we are very much present in the UK. Full-scale commercial bank, so do all the banking products, debt products, but are purely focused, Stuart, to your question, on the technology, innovation, and healthcare sector. So we're really working with those fast growth, certainly in my space, companies that have decided to take venture capital. I saw a question, and certainly that is not the route for everyone and comes with its own challenges. But often the main debt product we're looking at, and through my lens, is venture debt, and that's debt to complement equity. So yeah, thanks to the ScaleUp Institute and the other partners on the phone. I think with sort of Southwest and Bristol, so we are getting into the regions now. We have 2 people in Manchester. I used to do quite a bit. I was looking through the attendee list and I recognized a lot of the names. I had a couple of people from SVB, I think, went to an event Bryony put on in December, and it's about visibility, right? So we would always love to do more, as the others say. We now have, I can't mention all of them, but some of the, if you think about some of those companies that have raised venture capital within the Bristol and Bath region, we do bank with them. And I think the typical point of when often companies come to us is, they might be raising equity and want help with introductions to investors. Often the starting point is when they're going to the US. We would love to chat to people earlier, but I think we're very uniquely positioned because we are in 29 locations in the US, as well as our UK presence and our European presence, that often people just want the simple help of, I'm going to the US, can you help with a bank account and introductions and other networks? So that's the general overview, Stuart. Happy to dive into anything else more specifically.
Yeah, so I suppose that the main thing there is, what are you seeing at the moment in terms of the demand or interest for venture debt, and kind of what, just a sense of kind of what, how is the market evolving for in 2022?
Yeah, sure. Well, I make a plug for, there's a state of the market report, European report from Atomico late last year, which you should definitely have a look at. And look, it was a record, venture debt specifically follows equity. So there's a record amount of equity last year, something like 26 billion, record amount of tech jobs, increasing number of unicorns, which Lauren was talking about. And so really off the back of that was a record year for debt. So I think in Europe, debt funding as a whole totaled about 11 billion, which is up from 5.9, so a huge increase. And of that was about 3 billion of venture debt. So, it's really debt to complement equity for fast growth businesses is growing rapidly. And it's no longer just, we're a commercial bank. There's banks doing this, and there's banks from the US now launching in the UK, people like CIBC, but there's also a lot of debt funds. So they are funds specifically set up to put growth capital into businesses. So yeah, the venture debt market's probably 2.5 times over the last 5 years, and really is still a very small percentage, probably 5% of the overall capital. But you can see, has a huge upside as people look to follow the equity market.
Right, thanks. Now I've got, there was some questions have been coming in while we're obviously trying to run through and talk to you all about where you are and what you're seeing. But some questions have come in. One is, if you can prove your startup has a valuation of, presumably will have a valuation of 10 million over the next few years, how much equity should be given for £1 million investment? Is it 10% or typically less? Kind of, Ned, do you want to sort of first take that one on?
Yeah, happy to. Short answer is that doesn't quite work like that. The valuation is absolutely an art, not a science, as we all know. The reality is you can't sort of prove any valuation, but at the smaller end of the funding market, it tends to work more based on the return that the investor wants to see rather than what the valuation is today. And that's because, partly because it is very hard to prove a valuation of a small business. So the way it tends to work is by presenting your plan, your growth plan to investors and giving them some comfort over the way the shareholder value will grow over a period of time, people then work back to that, from that, to say, what level of risk do I see, and therefore what level of return do I need? And that implies the equity stake. So to give you a brief illustration of that, if everyone gets comfortable the business could be worth, say, £10 million at the point it exits in a few years' time, and then if the investor is, let's say, to keep the numbers easy, wants to get a 3 times return on its money, the equity stake will be a function of how much money do I invest today, and then making sure I get 3 times that in a few years' time. So if I invest £1 million today and I want to get £3 million out in the future, that then implies the equity stake today should be circa 30%. That's a really simplistic way of looking at it. There's loads of other tools that you can flex to change that number. So, for example, if 30% dilution was too much for the existing shareholders, and they were only prepared to accept 20%, well, in that case, how do you give the investor some downside protection and to make them feel better about that balance of risk and reward? That's a really common way of looking at it. Say, well, okay, if you can have your money back, you to the investor have your money back first, then maybe you're happy with a lower level of equity, and then a smaller share of the upside. A lot of entrepreneurs and business owners will want to go for a deal that looks a bit more like that, because they will have a higher degree of conviction over the upside inevitably, because they know the business better than the investor. But hopefully that answers the question without being too complicated about it.
No, thank you, Ned. No, it's very well. There you are, and you've had in the chat. It's been an illuminating answer. So you've done. Thank you. Done what every good panelist has to do. The one other question that came in through the chat was obviously from a slightly earlier stage than the scale up stage, but for very young SMEs looking for growth capital who haven't yet built up much of a credit rating. Maybe actually, Ben, that's one for you. Any advice there for how the younger SME can approach sort of this growth capital question?
Yeah, and look, there's I think if you try and put debt into 3 categories, right? So the debt I was talking about is venture debt, which is essentially lending to loss-making businesses and very much reliant on equity. There's also debt, classic sort of corporate finance debt when you're lending to EBITDA or cash flow that someone's producing. And then there's debt alongside a balance sheet. So that kind of hopefully helps with some of the questions that have come up. Is it's not all about fast growth. It's not all about raising venture capital. Of course, the debt markets are huge. It's just venture debt is newer. I think that if you're at an early stage, even something like, and I don't know your business model, but if you are generating invoices, etc., the sort of invoice discounting market has become huge now, and there's many niche players focused on that. I think at a very early stage, often is about a hybrid of some sort of seed or family or angel investment, family and friends, and then leveraging the debt markets as well. And maybe if you've just started, it is very hard to access pure debt. And that's where grants, R&D tax credits come in as well.
Mm-hmm. Thank you, Ben. I suppose that actually these questions, I know one probably for Ned and for Ben. Scaling businesses are they always as well prepared as they need to be before pitching to you? I mean, are there things that could be done that they kind of generally, I mean, obviously these are plenty of specifics, but that they could do better before making the approach for that loan or that equity package? Ned first.
Yeah, you obviously see a wide range of different plans, and different people are prepared to different levels. But I think the common mistakes that we see are around articulating to potential investors what the pitfalls are, what the downsides are. So everyone's very good at presenting the upsides and the opportunities, and that's clearly massively important, because without that, you're not going to get past first base on any conversation. But I think you could, as a management team, you can build a hell of a lot of credibility by being really open about the challenges and the risks you face, and therefore your plans to mitigate those. And I think that feeds into a point that Sam rightly raised earlier, which is then be really open with your investors about what bases you haven't got covered. So where do you need help? And be really specific with investors about, that these are the skill sets I haven't got covered in my business, where I want some external input in it. I think that hopefully narrows down the field of people that you should be speaking to from an investment point of view, but also shows a high degree of openness and therefore credibility in my view. I think the other area that would be perhaps a more specific pitfall would be around building out the management team over a period of time. You see a lot of particularly young businesses presenting their management team as complete, which I think it may be for the stage of business that it is currently at, but bearing in mind you're raising funding to double, treble, quadruple the size of the business over a period of time. I think management teams need to be more open about the skill sets they will inevitably need to bring into the business over a period of time. It's very rare that the management team for today is the right management team for a business that's several times larger. So I think being clear about that, and again, the help you need to build that team can also go a long way to build credibility and show that you're open-minded and keen to get that input and influence from the partner that you're looking for. So they'd be two of my key things.
So I've got to ask Sam actually about that. Then, when you were with raising the money, talking about the upsides, but did you talk about the downsides or the potential risks as well in with obviously with both the crowdfunding and then talking to the investment fund, and I've also got to ask, of course, if you start building out the management team, it's you and your twin brother who are behind this. So how do you address that one as well in the
it's a really interesting one. Firstly, it was really interesting hearing Ned there and Ben on kind of like what you need to show the investor as a startup. You're kind of like it's full on and you don't have all the, obviously you're kind of like a very small team, and you're having to sort of like be multifunctional with regards to kind of like what you're able to do. So you inevitably don't have the kind of like the resources to be able to provide that sort of complete kind of like I suppose the pitch decks you really want, and also that all the P&L. We now have that resource in the business because we're at a certain size. But when you're trying to pitch initially, it's very difficult because you don't have the time, and you also and all the cash to be able to kind of like to provide that level of that detail. So it's sort of chicken and egg thing. When you do, then we're now at a stage where we can give very comprehensive P&Ls and monthly and investor updates, and they look really professional. It's exactly what the investors are requiring. So yeah, it's an interesting one. Transparency, 100%. Yeah, you have to be transparent. So we're big believers in that across the whole business. And I think if you're transparent with the investor, we all know that we are all just humans and we know what businesses are like. And as long as if you're honest and you say you're showing where you can mitigate those issues in the business, then I think it's only going to give confidence to the investors, hopefully. With regards to management team, that's a really interesting point. We have a very good management team, but it's a very at the moment. Obviously, it's both myself and my twin brother who are in the directors in the business. But we have head of global sales and also head of marketing now, who kind of like who and a logistics. So there's a 5 of us within this senior leadership team. But as we grow, yes, there will definitely need to be probably changes to that leadership team to be able to kind of put us onto a global stage. And yeah, thanks.
Well, yes, that's very good to hear. Your responses there, Sam. Thanks for that. One for all the three of you, for Lauren, Ben, and Ned. I mean, how much do you talk to each other about businesses that may have approached you and you've seen maybe they weren't right for you, but you know, you could see how they might be for somewhere else? Do you talk to each other about companies, about you know, scaling businesses that are looking for finance in your area, and that you refer around? Or if they come to you and they're not right for you, that's it, that's the end of the conversation? Lauren, maybe.
I think there's a really strong ecosystem that surrounds, the growth, scale up, and businesses at kind of all stages of that kind of funding continuum, from early stage through to, potentially, that kind of IPO piece. And one of the things, to put it into context, that I have been trying to do over the last kind of first couple of months in role is actually getting to know that broader ecosystem in these regions, and understanding what everyone's role is in that sort of funding ladder, so that whilst we may not kind of make direct referrals as such, we are all working together to support that community and have different roles as part of that funding continuum, and are very much a community in that sense. And which is why I'm here, and we've worked with the ScaleUp Institute and British Business Bank. I've done lots of work with before on other projects, and that's part of that community to support growth businesses in the UK and internationally, and we all sort of want the same outcome there.
Yeah, thanks, Ben.
Yeah, just quickly, I think building on a point Sam made about sort of choosing your investor well and how important relationships are, and that, that's exactly the same for debt providers. So I would always say, reference people who ask your network, if you've got board members, that kind of stuff. We do partner with some other debt people, and naturally it's quite a small market. So absolutely, if we can't do something, or maybe someone's looking to use debt in a slightly different way, we always will look to make references. What we could definitely do more. I know some sort of high street lenders have a formal process. If they can't help, they have a formal referral. But yeah, we work closely with a lot of the debt funds, etc., and we'll always look to try and make a value add introduction, even if it's not one for us.
Great. And Ned, if I can, because I'm mindful now we're very nearly at the end of our time, and there is one other sort of broader issue I'd like maybe you to take home. ESG credentials and net zero agenda become a pretty central focus in many new investments. Are you, as an investor, putting more weight onto the ESG credentials of the business before you look at it? And obviously with Sam here, we've got a fantastic example of a kind of a very strong environmental business. But what's your perspective as an investor?
Yeah, it's massively important, and it's gone. It's just grown in importance, particularly over the last 2, 3, 4 years. So it's always been part of our investment making decision process. And we're just constantly refining sort of how we assess that, how we can add value to businesses around their ESG strategy. But yeah, it's hugely important, to the point where it definitely goes to valuation. So a business without a good ESG story is worth significantly less than the equivalent business that does have a good ESG story. And I think it will get to the point where in certain sectors, businesses become uninvestable or unsaleable if they don't address this, because it's just you can see in everyday life how important these things are. And I think fundamentally it's the right thing to be doing for every business, every investor, and making sure that they do keep this front of mind.
Is that something, Ben, that you would certainly? Are there businesses that will become unlendable actually if they don't meet have the right ESG credentials?
Yeah, I definitely. I think I noticed even with SVB, with our results, we've just made an announcement about where we want to be by 2025. But I think we'll start to see terms within offers to say we expect you to have done X, Y, Z, and we're also following the money, right? So a lot of equity is now flowing into companies that are helping climate tech, like Sam, sort of ethical, environmental underlying, and so we absolutely want to lend a lot more into these sectors. And as I say, we've made a sort of more personal corporate commitments within 3 years to get to sort of carbon neutral.
And Lauren, that's presumably what your perspective on the weight being given to, there's huge amounts of money being put on the public markets into companies with the appropriate ESG credentials.
Yeah, very much in line with those comments and what had said previously. ESG continues to be really, really important from our perspective. Where we've issuing lots of guidance and help with companies to try and ensure that they're supporting their reporting in that regard, and generally our advice around those things is that you really can't think about that too early. Even those businesses that are not specifically have an environmental angle, or they're not sort of making solar panels, or any business now needs to have this ESG awareness and agenda. And I think the earlier you can start thinking about that, the better. I don't think there's any doubt that the importance of that is going to increase over time, for sure. I agree completely.
Fantastic. Well, I think that that brings us very nearly to the end of the show. So I'd like to thank Sam and Lauren and Ned and Ben for their contributions, and it's been a fantastic discussion. And I can now hand back to Lloyd he was going to hand to say, and maybe Irene, would you like to say a final word of to conclude, and then everybody can go off and have their coffee and their cake legally.
Thanks very much, Stuart. Look, great to have everybody participate today. We want your feedback, so there's a little poll going to come up now just on that, and we will connect you with the various people, the panelists that you were speaking with and gaining insight from. This is about making sure we connect the financiers with the scaling business leaders. So thanks for the questions, and thank you everyone who also were our panelists today, and the British Business Bank for bringing this together. Have a good rest of the day. We have given you 1 minute back in your lives, I think, and you give us the feedback you want. Thank you, everybody.